perhaps slightly tough one for you to answer because you are in same business. In NBFCs, the likes of Motilal Oswal, for example. I mean, of course, you won't talk about that stock, but Edelweiss, IIFL, we saw great wealth creation, and now we've seen fair bit of price damage. Your thoughts on what's happening here? Of course, the likes of Bajaj Finance have bounced back very sharply, but Shriram Transport as well has bounced back. But overall, how do you look at this space now?
See, I can talk about my company to some extent because we have designed our company in a particular way. I mean, every company is designed very differently, though you can club it, IIFL, Edelweiss, Motilal Oswal, these three capital market companies, and if you do the chart, I mean, they literally go in the same direction. But these two are, all the companies, actually every company is very different. And it depends on the design of the company. So we can talk a little bit more about Motilal Oswal because that's where I sit and kind of do things. So here, see, it is a cyclical company. You cannot undermine cyclicality of the underlying business. Say like we have a very large portion of almost 50-60% depending on the time. You have the broking business. So broking business is very market dependent, what's happening in the marketplace. Then you have the AMC, which is now much newer, but that is about 20-30% of the profit. So that is very stable, very high quality. But broking remains underlying, fluctuating. Then we tried to build Aspire, which is a...
which was a mistake?
No, not a mistake. See, it takes time to build. You guys are in hurry or outsiders are in hurry. But for jitna time see, in broking I started in 87. Till 90 I didn't know whether I exist or not. It took 5 years for us to wait for the first bull run. When we took the AMC license in 2008, 2014, 2016 we broke even. It took 10 years, 8-9 years to break even. So everything takes that learning period. So we are paying our tuition. See, when you are building large business, your tuition fee is also large. So we are paying that. We are going through that process. I think, I would say 60-70% of learning is done. Yet that 1/3 is still left. We are coming on top of it. I'm quite sure that next year, as we have projected, it will be far better than what it was in last year. But suddenly you will not become blue chip in that particular segment.
I agree. Since you're willing to talk about your company, your thoughts on this recent SEBI order as well, Raamdeo?
Yeah, so that I don't want to talk because थोड़ा sensitive है, and it makes me sad to see the order. But I mean, whenever you meet Motilal ji, or we've decided that Motilal ji will talk, because actually I have not followed this in person, so it remains well communicated if one person talks about it. But doesn't make me happy.
So let's talk about some of the things that you've really closely followed. Big investments. I don't know if positions on the oil marketing space for you continue to be where they were. Because what we saw play out last week was an interesting dichotomy. When crude was moving to 67, all these stocks were actually rallying because people said, no, let's focus on inventory gains. And now they have pricing freedom. I mean, so the market sentiment also changes very quickly on a dime. Suddenly the worry was not there about the pump prices. Your own thoughts on this space and whether you are still comfortable holding those kind of positions?
See, you buy stocks based on certain your own assumption or dream or what vision you have about the stock. So the thing was that after so many, one is that it's a very large business, the largest business of India. Second, it is monopolistic. These three companies, they are literally monopoly on 90-92% share on the other thing. And it's a 24/7, 365 days business. It's the ultimate retail, if you could talk it. So, and I mean, making 2% profit on their sales is not too much to ask for. From crude to 1 liter in Mathura at the middle of the night, you got to make 2-3% net profit. So, and government said you can make that reasonable amount of profit. So we were saying that the reasonable amount of profit is possible, and government erred in their policy between 2003 and 2013. Now they will never commit that mistake, and hence we have a reason to buy at 5-6p multiple, a damn good business, 25-30% payout. So 5-6-7% dividend yield. And 5-6%, the same 6-7%, 8% volume growth, which has been the trend. But I mean, all kinds of conduct by the government in terms of buying, selling, and, hammering at any price. I mean, the stock is held from LIC, so I think those things distorted and that 1 rupee thing. I mean, government's that was the last thing in the. So they played in the hands of speculators. So this entire 12 months, 18 months has been quite trying to hold the stock and suffer. I mean, I think. Our schemes have suffered maximum because of having a good chunk of that in the portfolio. So we must have lost 4-5% of the performance because of that. But that's the kind of price you pay for a very focused allocation and your conviction on the
focused allocation. You know, I wanted to ask you about that. Your allocations largely have been the auto stocks, your Aisha Maruti. You have a little bit of TCS Infosys, and then you have private banks, largely. Will you move out of this now?
Why should we move out?
No, I'm asking you. Is there a fourth sector that you are looking at?
No, see, I mean, whenever ideas come,
I'm not telling you, I'm asking.
Yeah, no, just say like software looked at some point of time nice. We included Infosys, TCS again.
No, like cement. I don't know whether you would look at something.
It's not looking that attractive to us, but we are open to. See, it's a public money, and we are only what you call determinations to make money for them. Okay,
yes, of course.
Wherever we think time has come for us to jump in, and the prospects are not discounted by the market, we'll definitely jump in.
Autos, you remain as convinced as ever, despite all this gloom and doom talk, as if people will not buy bikes and cars now in the country.
So, no, let it come a little more down. We'll buy some more.
Okay.
You know, one more question. This whole IT theme, Infosys and TCS, you played both the stocks, of course. In between, there's a bit of a race. Now, for large cap IT in particular, how do you think things are looking? And TCS has corrected quite a bit from its highs, though moving up once again.
I mean, we remain positive. I mean, the sector is, see, this is India's best possible industry. I mean, the opportunity for Indians in a full employment situation for the US economy, and the kind of things we can do, the size of the contracts we can take, and the competency TCS and Infosys have in the world order. We think that, and they're not hugely expensive companies. They have a huge free cash flow. The return on equity looks to be 25-30% because they have the large amount of treasury. So, in fact, my request is that they should become far more aggressive in payouts, so that balance sheet becomes leaner, and they can buy back their shares, and so those kind of things are possible. So they will create value if the management is strong enough to grow and snatch market share from the global peers.
A final word on the debt markets as you see them. That's where the worry came from. But markets are usually, I mean, I would assume equity markets have you know, a very close relation with the debt markets, and they know the problem. Is it discounted, or is it still worrying that that might be the spot where a downfall may come?
See, you don't have to have downfall. I mean, what happens is that things don't move up, you know, because
inflows are not coming.
One is that I don't understand debt market, but no economy can function well unless your credit markets function very smoothly. So we have very, you know, like government is trying very hard. They've removed so many banks from the PCA.
Yes.
They are trying to help NBFCs. But the way it was functioning, say 6 months back, was there was a segment of PSU banks. They're playing their own role in maintenance or whatever, but not growing so much. Then you had the private sector banks which were taking bulk of the growth on their side, and it was shared with NBFCs. Now, this third leg is kind of stumbling. So what do you do with that? So one is to repair that particular segment itself, or it finds a newer way of doing it.
Yes.
Say they buy they find new owners and then recap and move on in life. But right now it looks that they are limping, or you can't get growth from there. So the new banks which are coming out of PCA, at some point of time, credit flow will start from them, and they'll make up for what deficiency is here. But right now, NBFCs, your automotive companies, even the builders, HFCs and all. See, if you want to buy a home of 1 crore, 30 lakhs he has given to the builder, but 70 lakhs has to come from the mortgage company, and that check is, sanction letter is there, but check is not coming through. So how do you know?
Yeah.
Let us hope.
Just one last question.
We're out of time.
You know, because you have created some 100 baggers, like of course from the time they were unlisted, you know, the AU name comes to mind. RBL Bank is something that you have backed. What's the next big opportunity, Raamdeo?
No, see, you just keep watching. I mean, as the market goes down, more and more opportunities will come. See, actually the big bullish thing is that as the market goes down, we should become far more bullish, because stocks in 4 years time or 5 years time will go where it has to go. But if my purchase price can be 30, 40, 50% cheaper, that much more bagging can happen. So, I mean, the weak market doesn't scare us. At least it doesn't scare me. You know, but smooth functioning of businesses is most important. So if there is any obstruction to smooth functioning of business, and that too for prolonged period, that kind of clouds the mind.